just want to thank you, Dr. Grant Stevenson, the organizers, for allowing us to join the festivities. I've been here my 7th meeting, so it's been a long time coming. It's been good. Thank you to your panel for joining us. Dr. Jansen, she's going to just kick us off with a presentation. And then also we have, Fauad, Hasan here with us, and also Will Fletcher. Both of them, both Hasan side more on the entrepreneurial side, but also investor now. And, with Will really on the investor side to provide comments. We're going to answer 3 questions. I think the first one is, today we talked about a lot of innovative and new products. How do we introduce these products? How do they impact the practice? And which ones are the right ones to bring on? We're going to talk around GLP-1 as one of those examples. Then we're also going to try to answer a little bit, who's the future winners of aesthetics? Is it the single practice, smaller groups, larger national platforms and roll-ups? We'll talk a little bit about that. And then also, if you're an owner of a practice sitting in this room, how should you think of where to invest? How do you unlock enterprise value? And how should you look at timing if you also are thinking of selling your practice? But we'll start off with Dr. Jansen to do a little presentation for us.
All right. Excellent. And thank you so much to everyone here. I will keep it brief so that we can have enough time for a good discussion. But just briefly, my name is Leigh Jansen. I'm former life practiced as a plastic surgeon and now with McKinsey. And so naturally, quite interested, GLP-1s shaping so many different industries and things within life sciences and medicine. And so wanted to think about what it means for aesthetics. So we've been doing a little bit of research, some of which we'll present here. Okay, so not too many pages, I promise. Here's the key messages. Number one, if we look at GLP-1s, I think many comments today already have highlighted this. There's a whole new wave of demand from patients coming in seeking medical aesthetics after having lost weight on GLP-1s, different from the group of patients or consumers seeking that from before. The second one is when we actually look at what the nature of that aesthetic demand is. It seems like there's not that much dialogue, but all of you would probably know this quite well. You need to actually think to the level of how much weight loss. Have they just started that? Are they planning it? Have they lost it? Are they on that yo-yo journey? What does that look like? What's their health status? In terms of being able to be, able to have certain nutrition areas, surgery, et cetera. What are they trying to do? Are they trying to actually use this as a chance to maybe address aesthetics things they didn't otherwise versus, just get back to something a little bit more like they, how they looked before? And then, of course, what's their budget for health and wellness overall and for aesthetics? So we did a bunch of research to try to understand this. We'll walk through a little bit of what are the archetypes of patients and consumers who are coming out of this. And for us, this was really quite interesting. What do those groups look like? What are they spending? Which actual services? And what does that journey look like? And then, of course, spend a little bit of time thinking about what this means, whether you're a provider or a manufacturer, and of course, investors across all of those. Perfect. Okay. The only other thing that's important is, this is also not static, right? A year ago, what did it mean? Who was taking GLP-1s? What does that journey look like? Is it even very different from now? And guaranteed it'll be different. First of all, it isn't just GLP-1s. There's a whole industry across cardiometabolic and obesity research. So this is something that we need to, continue to understand. But as we looked at why this is continuing to evolve, like for us, it was really 4 big factors. The first one was just, what's the clinical evidence and indications, right? Like obviously this started out with diabetes, but if you just look at the clinical trials and the types of patients who are receiving these and probably losing weight, they're actually coming from a much broader clinical background. And so again, that's important as you think about who is then ending up in aesthetics clinics. Patient acceptance is increasing across the board, and so that again is changing the dynamics of that different group of patients who are coming in here. Different routes of administration, why does that matter? Well, it matters to the extent that it's changing those patient journeys, and actually how much people are losing, how much weight people are losing, how stable they are, how confident they are in that staying stable, and therefore maybe being able to seek a treatment that's a bit more permanent versus want to have something pretty flexible because they're just really not sure where things will land, and all the budgetary considerations along with that. And then finally, market access. When we did some research, even just a year ago, we were talking about this is a big piece of people's budgets, but just the cost of it's still high. But for a lot of the cash pay in the U.S., you can't go anywhere without seeing ads for decreasing prices and increasing insurance coverage across the range of indications. Again, all of this means from an aesthetics perspective, things are fluid. Okay, so we looked, and we're just trying to think, who are these patients? Patients or consumers showing up for medical aesthetics after having lost weight, and so we did some research. And really, there's 4 main categories. It's about balanced across each of these, and you can see is a pretty wide range. So there's everything from the what we're calling sort of the maximizers. They want to do everything and everything. They're not as worried about budget. They're willing to do invasive, non-invasive, less invasive, and want the premium experience and really high quality and trust around that. You can see the average spend is quite high, and this is the average, right? Or maybe actually I think we took the median, but obviously it goes much higher per the $200,000 facelift comment earlier. The next is, I think, pretty interesting around the strategic optimizers. Surprisingly, they are having a lot of surgery and still willing to invest in the areas that make sense. The value seekers, and then the surgical resolvers, which, for those of you who sort of saw the wave of bariatric surgery and all the body contouring surgery, it's easy to see that, there's certainly a subset of these patients who are surgical candidates or would benefit. And so that's, again, a slightly different archetype here. And my favorite slide here, it's the most data-heavy slide, I promise. We have an article as well in case it's easier to refer to later. But we really wanted to see, and I personally was quite interested, if I sort of put myself what if I was seeing these patients now? How would you counsel them? What should they get in which order, depending on those different medical factors, goals, budgets, timelines. And there's a few things that jumped out to us. Number one, whether you're that maximizer to the value seeker and everything in between, the standards of what's most common across medical aesthetics holds here. So, but if you look at HA fillers, neuromodulators, skincare, right? They remain the foundation. Not surprisingly, but still good to see for this group. Interestingly, surgery, right? Many med spas, they're not doing surgery, but their patients are often having surgery. So again, to us was really, really interesting. A high share of these patients, and I say patients if they're having surgery, are indeed having surgery. So to us, it was interesting because, again, you should know so that you can counsel them what to have and what to order, even if that's not what you're providing in your 4 walls, was one of our thoughts. And then just the other one is it's a pretty wide range. And again, for us, often investors or clinics will ask us, or manufacturers, what's the right bundle? What's included? And to us, this was a little bit of it could be a whole lot of things. And you actually need to think about this maybe more deeply than is on the surface. A few points here, of course, as we sort of asked, for these aesthetics providers, what does this actually mean? What are you doing to adapt to it? So are you offering more things? People, your patients and consumers are using many. Many of them said they are and probably will have to do so less so in the future. Many are providing these sort of curated treatments and a little bit of pathways, right, just to help navigate both the patients and the consumers, but also for the clinicians and the staff on teams. Partnerships, I thought might be higher, right? But again, if you're not offering everything, which usually, in many cases makes sense, are you having partnerships and sort of collaborations to help manage across the journey? Some, and it probably will increase. And again, bundling and subscriptions, some, and again, will increase as you sort of think about that longitudinal journey that many of these weight loss patients are on. And then not surprisingly, enhanced training, safety, quality measurements, is pretty much on everyone's minds. And then, just some thought starters of what this means. There's three main buckets. The first one is like, which aesthetics products and services to offer, right? Which ones should you offer? How do you think about the overall journey? It's complicated, and many of these are actually using the full spectrum, and not even to mention the innovations that were in some of the sessions before this. The second one is around personalized patient pathways, right? There's so many factors around where they are in the journey, how long they want the duration to be, what their budget is. So, actually finding a way to not just default to toxins and fillers and skincare or biostimulatory, but actually to, think about this slightly more deeply. And then, looking at those, even the value seekers, it's a lot of money each year, right? And this is, potentially something serial. And so sort of thinking about how do you think about cost effectiveness and measure those outcomes to, continue to raise the bar. Yeah, perfect. Thank you. Go ahead.
Thank you again for sharing. She could talk for another hour, but we limited her and say, listen, we need some time because all of you need some time to speak. But if you maybe to start with Fauad, you've, sat on the innovator side, you've sold to practices. Have you seen the introduction of GLP-1 really impacting R&D, how we look at combination treatments, what's coming down the funnel, knowing that the impact this has got, and the new consumer? Because according to some of the data, 2/3 of GLP consumers are new to aesthetics. And what does that introduce for new product development?
Yeah, absolutely. So GLPs in general, and obviously there's been a lot of talk about it. I think there's too many experts on GLPs nowadays, right? So the way I see it, it's actually introducing a new category in aesthetics. And it's not just about, in essence, GLP is basically kind of blurring the lines between the wellness, the metabolics, and aesthetics as well, right? So, but when it comes to the treating anti-aging or treating aging, GLP is in essence going after a bit more rapid biological change, and thereby then it introduces a much larger treatment protocol, right? So it's not just about isolated aesthetic correction, it's more longitudinal in terms of how it's addressed, right? For example, from the classic product developers, right? You can't go treat in just one way. It has to be a multimodal treatment. And the GLP-related tissue changes, you can't just treat that with your classic pure volumizer approach, right? So you have to have a combination of different products together coming into that. And so some of these innovators, some of these product developers are thinking more, how do I maintain the structure? How do I maintain the muscle preservation, and while at the same time keeping the tissue quality? So it's, in a way, it's opening up new opportunity, innovation, and you'll see in the coming years a lot more innovation coming because of GLP in itself.
Awesome. No, thank you. And Will, you have a different lens, obviously through the plastic surgery lens. You guys are rolling up practices. Everybody talks about GLP as this growth engine. How do we look and how do we leverage it? But what's some of the both pros and cons if you look at from, what is it doing to the practice, for the services that they offer typically?
Yeah, no, good question. I would say it both disrupts and enhances your practice. When you get consults into a plastic surgery practice, many of the reasons, or one of the biggest reasons someone can't move forward is their BMI might be too high. So this gives a great pathway to not just tell that, and from a patient experience standpoint as well, hey, you're too heavy, I'm sorry, I can't help you. It gives you a pathway to help them get to a safer BMI to do surgery. Within your kind of mix of your surgeries, it's probably disrupted and really hurt pure lipo. So if your business was founded on pure lipo, you're probably hurting and struggling quite a bit because this is an easier pathway to simply lose some weight. What it's enhanced, though, is when you do lose a bunch of weight, you have a lot of excess skin. And so it has enhanced the procedure volumes for things like tummy tucks and lifts and procedures around your face and your neck.
Great, great. And to build on that and how it's impacting your practice, you know, if you look at all your data, I know there's a lot of data and stuff, but if you can point maybe one or two counterintuitive or specific data points that you think that you guys found that practice owners should really incorporate or think of in their business model?
Yeah, I mean, yeah, it's a tough question because I think we didn't know what to expect, right? And I think to me the most counterintuitive or maybe surprising thing was, nobody knows, right? And I think like what brought it home to me was looking at, gosh, if you know the average patient is having all of that mix, there's very few clinics that have that view of those patients, right? Plastic surgery clinics, I think, would have the best view of that. But if you think about the industry overall, there's so many patients who are getting pieces of treatment, and how that's evolving and what this actually means, and for combination therapies, for that longitudinal view, which I completely agree with, for the underlying science, it's like surprising that everyone's talking about it, but it's still like actually not too well understood. Yeah.
Okay, and well, back to you. If you know, a lot of the docs in this room, they're very excited. They come to you, want to sell their practice. They just introduce a new product. It really lifts the revenue. There's suddenly influx. How do you underwrite it? How do you work it into the models to make sure, is this, you know, just a short-term bump? You know, how do you guys look at it?
Yeah, it's a good question. A lot of our surgery practices don't really have a ton of GLP-1 revenue. We think it's here to stay, whether it's GLP-1 or other medications, but there's going to be that pathway to losing weight. So we don't think that's transient necessarily. I think that's certainly here to stay. I think if a practice did have a lot of GLP revenue, we'd have to really get our head around the adoption and the sustainability of that revenue. What is the churn rate in those folks, and where else could they go get it? Are you charging more than they could get, you know, online at a Hims and Hers style direct-to-consumer platform? And that could lead to something not terribly sustainable. So it's more, where else could they buy the product? How does your pricing compare? And what is the stickiness and the churn in those customers? Broadly, we think it's here to stay, but within each business, you'd have to look at that and understand it.
Awesome. So as we shift to the second question we wanted to answer about single practices versus roll-ups, you know, obviously a few years ago, or let me say 5 years or a little bit more, it was typically more common in the dental community. And then it shifted to medical derm, and then med spas, you know, and now plastic surgery practices. Where do you think is going to be the majority of the profit pool? Do you think it's going to be, you know, be driven by the independent practices, small regional groups, or the national groups?
Sure. You know, I guess when I think of this industry, there's pros and cons similar to all the other industries. I think if you look 5 years from now, it'll still be very fragmented. A lot of independent practices, they're built on the brands of their surgeons that have built those brands over a long time. I don't think they're going to go away in 5 years. One trend I think you'll see, which we've seen across healthcare, is more younger, newly trained fellows are less likely to want to go start their own practice. They see the value in mentorship, admin, marketing support, and the lack of financial risk to join a larger practice. And so we've seen that in other subsectors in healthcare, and I think you will continue to see that here. I don't think that means that you won't have a fragmented marketplace where you don't have independent practices. They will definitely still be there, but the trend of more larger practices and platforms, if you want to call them that, I think is growing. So the percentage of platforms will grow, but there will still be plenty of independent practices in 10, 15 years.
Awesome. And a plug for your firm. Where do you guys focus? Where do you like to spend your money?
Yeah, sure. So we're a healthcare firm. We invest across the ecosystem. We don't invest in just products. Or we don't invest in single products. So, but most of what we do is multi-site healthcare services, but we also work on services, outsource services into the pharma and med device world, and then business services where healthcare is the customer. So generally underwriting payment streams across the healthcare ecosystem. We tend to be the first institutional capital into a deal, so we kind of view ourselves as company builders. So when you talk about platforms, we are trying to build those essentially. When we invest, they tend to not be there just yet.
Okay, awesome. Fauad, on you on product innovation. Okay, how do you, apply some of that model that you're doing, in introducing new products into single practices or platforms, how do you think maybe your perspective on how they analyze products differently to bring in, and then also who is it easier to work with introducing some new innovation?
Yeah. Let me start off by saying just one quick point about innovation, and I gotta say that the medical aesthetic practitioners are by far the most innovative medical practitioners in general out there. And I'll use Botox analogy for that. There's more use of Botox discovered by physicians, and they're patented as well too, and then they will come to people like Allergan and sell their patents, right? So innovations come from them. They're the ones who will find new uses for some of these products as well too. I mean, we used to refer them as artists, right? And artists have their toolbox, and in a toolbox they will have different product to treat different patients in a different approach. And that being said, between the roll-ups and independents, obviously innovation obviously sits with the independent guys. Founders are still involved in deciding what products to use, and I think it's more about conviction more than anything else. Roll-ups will obviously are great, and once you have a winner, then they will take it and then scale it and maximize the potential of it. But at the end of the day, innovation starts with the individual practices and those individual doctors as well. And then obviously from the platforms and the larger groups, they will be the ones scaling it up. There's also a difference between the behavior as well too, how decisions are made. Obviously, even the platforms, they will make a longer bureaucratic process to follow in decision making. They have to run by every single practice within the group to make decisions. So they're not as open to new concept, new ideas. But once it's a winner, it's a successful idea, then no better than that to validate and promote it and get it to the next level.
Okay. And Leigh, McKinsey has obviously covered multiple companies, and especially in our space across consolidation cycles in derm, dental, ophthalmology. Where is aesthetics on this S-curve? And maybe also share a little bit, where do you think is a sweet spot where you can get leverage on the G&A, but still not lose touch with the consumer, which is so important to drive your growth?
Yeah, I love the question. I personally, and us as a firm, have worked with a lot of private equity and other private capital investors looking at these. And I think if you look at, dental clinics, orthopedic clinics, all these things, they're definitely way earlier in that curve. And I would say med spas, not plastic surgery clinics, we're sort of some of the next waves. And I think some of those went really well, and a lot of them didn't, because they just said, med spa, and not led by people like Will and business builders, and maybe didn't appreciate some of those nuances in terms of what are the offerings and things. Whenever we talk to investors, we always hear plastic surgery is a little, I don't know, right? I think people are a little bit nervous about it. I actually think it's a really exciting space because there's a lot of inefficiencies, as you said, and just in terms of just the basics, operational things or supply chain and how you attract talent and training. I think that the thing is you have to be really careful about what is there a brand with the clinics or not? Who are the, what's the control? How much autonomy do you have as an artist, as a clinician? I think, a plastic surgeon, I would say that's really high. So I think there's definitely an opportunity. It's just, it's a little bit more nuanced and tricky. So would want, people like Will helping out in those situations, yeah.
So on that point, Will, put you a little bit on the spot so you can call out your fellow investors here. There's a lot of kinds of roll-ups, and there's different business models in aesthetics. Where do you see the model is working? Where do you see there's some silent underachievers? People only talk about the wins, they don't talk about the loss. So where do you think is the model? Where do they, between med spas, derm, plastic surgery, where do you see some of the winners, and where do you see the challenging business models are?
Sure. So I would say, the winners right now, which this is across healthcare, so you have to say this first. The table stakes are you do have to have strong clinical leaders. It doesn't matter what business you build. If you don't have strong surgeons, clinicians, doctors, you just don't have a business. The next piece is a relentless focus on organic growth. That's not something that was the case 10 or 15 years ago, but I would say the investor landscape has changed, and so just jamming 2, 3, 4 practices together, calling it a company without integrated systems, processes, or governance, that it becomes a rudderless ship, so to speak, and they may not necessarily fail where they go out of business, but they're not really growing, they just stagnate. And so that model hasn't really worked in a while, and I think that will kind of fail to attract recurring investor demand. And so there's a relentless focus on organic growth, and it has to be sustainable across a number of years. A flash in a pan where you grow 1 year but then are flat for 4 years is not that enticing to an investor where they're wanting to put capital and know that there's a good return on that capital year in and year out. I would say, again, you also need to have in this industry specifically, a very strong patient acquisition engine. You need to put as many quality consults in front of your surgeons as you can to set them up to succeed as best you can. Next, after that, you need a good diversification among your surgeon network on your platform, both in terms of production, procedure mix, and then the stage of their career. This is a big piece, especially in aesthetics. You really build your business around the brand that your more tenured surgeons have built for 15, 20 years. But you also need younger surgeons that are the future. We have 2 fellowship programs in our network. They are the future of our business. And the halo impact we get from our senior surgeons really helps them ramp their business. And it's our job to help them ramp quicker than they would on their own. You have to have a reason to exist. So your practices and your surgeons need to have a better experience on your platform than they would on their own. And if you can't answer that question, it's going to be hard to get a bunch of investor demand. Succession planning is probably something you just need to, I can't underestimate how important that is in this industry.
Awesome. So let's shift to the last question, for the owners in the room, building, growing, selling, where do you, and Fauad, maybe you can take this one, where do you see similarities between building a product versus building a service, challenges, but where do they focus? Where, if you pull, your discipline that you put around developing new products, how should they look at their service, introducing it to their consumers to ensure they can build a sustainable business?
Yeah, there's a lot of analogy between the 2 models. I was fortunate enough to be a token R&D guy at Allergan on some of these BD deals, and the way we looked at deals back then was, what headache am I taking on, right? So that was the biggest thing that we used to focus on. And similarly, if you reverse the model as well too, if you're positioning your practice for acquisition and so on and so forth, one, build a brand, just like products build brands. Your practice should have a brand as well too, and that's based on the trust, the loyalty, the customer, and the patient, experience that you provide. And then from there on, the key is also how it's not just about one individual injector, it's about the system that is established there, that someone's going to take on, right? And those are kind of things that acquirers are always looking for as well. And more importantly, last but not least, it's about the attraction. And these acquisitions, exits basically don't happen overnight. You build years for that to make it happen. So there's a lot of analogy on that from the product development versus the acquisition of practice.
So, Will, over to you again. Now you have introduced new products. Your business is going well. I'm doing 3 to 5 million in EBITDA. How should I prepare before? What should I have in place before I talk to an investor? And how should I look at multiples? Okay, speak money now. Everybody's ready to hear that big number. I think most owners overestimate what their business is worth. But how do you look at it from a single practice, multiple, regional versus national?
Yeah, I would say, first maybe how to get ready a little bit. First is to get a better understanding of your financials. Where are you making money and where are you not making money? And where do you get your patients? And if you can diversify your revenue and add more surgeons, that helps with the succession planning piece if they're particularly on the younger end of their career, and it just helps diversify your revenue. And then you have an honest look in the mirror on your career goals. What do you want to do? What do you not want to do? And have an honest conversation with yourself. There's a balance of waiting long and growing to get a bigger exit. In this industry, having enough longevity and how much longer you want to practice for somebody to invest and build around you. So there's a balance of don't wait too long to where you say you really only want to work for 2 or 3 years, but you built a big business. You need to really be honest and have an honest conversation with a buyer about that. Just for the multiple perspective, I would say right now, 6 to 9x is probably a single practice, what that's probably worth. And then kind of as you get into multi-location with good diversification among surgeons, it can get into double digits at that point, but probably still single digits for each location right now.
Awesome. So I'll steal 15 more seconds. I just want to put, McKinsey on, with Leigh, with McKinsey on the spot. Everybody's excited to write a check. Now, how do we unlock value? How does the P unlock value? Where's the levers they pull to really get the leverage they want from their investment?
Yeah, we do this all the time. I mean, I wouldn't say it's kind of not exciting in that it's not that different in aesthetics, the categories, right? It's within the four walls, how do you optimize, quality and margins around efficiency and patient flow and staffing mix and all those things. There's like a big piece around, what's that patient funnel flow marketing look like and how do you improve that engine? And then depending on the footprint, there's like a big optimization piece around like where do you have clinics? Where should you have clinics? Should you close some? Should you open some? If so, where? There's like a large piece there. And there's a few other pieces, but that, and then within the four walls, of course, the mix, right? We've talked about, yeah.
Awesome. Thank you, everybody. Appreciate the time. Thank you.